Financial markets have always been difficult to predict, but today's stock markets are even more volatile than ever. In this new economy, investors need to rethink their investment strategy and create a sustainable portfolio that will earn profitable returns well into the future. Investor goals should be twofold. First and foremost, to earn a strong financial return. Secondly, investors should use their capital to help create a sustainable economy so that you can enjoy the fruits of your labor in a world where everyone is healthy and wealthy. These goals aren't mutually exclusive, and aiming for the second goal will actually help you achieve the first one as well. Every investor has their own unique philosophy, and this should be considered when rethinking your strategy. Whether it's buying a new home, retiring comfortably, or sending your kids to the very best schools, you need to understand why you're in the market. In the same vein, everyone has personal values that help guide their education and career decisions. These values should also be applied to your investment portfolio. Unfortunately, not all advisors recognize the importance of aligning your investments with your values, so it's important that you have an advisor that understands and appreciates your personal philosophy. To grow a portfolio as much as possible, investors need to pick tomorrow's winners today. One way of playing this game is to identify growing sectors. Renewable energy is a sector that has been growing rapidly since 2002. Although growth has slowed in the past year or two during the credit crunch, it's poised to grow substantially in the next decade. The International Energy Agency has suggested that annual investments totaling $1 trillion will be required over the next 10 years to transition to a low-carbon energy system. Investors who lack exposure to these growing sectors are missing out on a potential gold rush. Another way to pick winners is to identify growing companies that have sound management and a sustainable competitive advantage. Investors used to look only at traditional financial metrics, which is just the tip of the iceberg. Intangible values make up the bulk of a company's valuation in today's market, and investors who aren't considering environmental, social, and governance issues are missing a big piece of the puzzle. Sustainable investing is building huge momentum right now. Mainstream investment firms have started creating divisions to explore this concept, while large research firms are making acquisitions to bolster their knowledge in sustainability. At the same time, the United Nations Principles for Responsible Investment has grown to more than 600 signatories, representing more than $18 trillion worth of assets under management. Although not all firms have actually implemented the principles, each signatory has made a commitment to consider sustainability issues for investment decision-making. Finally, every investor has the opportunity to make a positive contribution in establishing sustainable financial markets. As more people recognize the value in sustainability and invest accordingly, the share prices of corporate sustainability leaders will rise. This gain will highlight the profitability of sustainable investing, thus encouraging more investors to jump on the bandwagon. This positive feedback loop has occurred time and time again in the investment world, and as always, those who get in first earn the biggest gains. To sum up, investors need to look at their current portfolio mix and then enhance it by investing in sectors and companies that are well positioned to profit as we move into the future. By doing so, investors will outperform their peers while actively contributing to the creation of a sustainable society. Because sustainability leadership is both possible and profitable, strategic sustainable investments, profits for people and planet.